Hello class, I wanted to do a quick video in case we don't have in-person class on Wednesday, January 25th due to weather. So if we're not meeting on Wednesday, I would really like you to review this video if you have not completed your Chapter 1 homework yet. I will set up a separate video to discuss a few items from the Chapter 2. So this will walk you through a few of your homework problems, starting with question 3 from the regular homework that is due Thursday, January 26th. When you're creating an income statement, remember to start with any revenue accounts. So service revenue is going to be your first drop down, and the amount given here on my problem will be different. Anytime I work out a problem, it will be different numbers from what you see in your homework. So learn the process. Don't memorize the numbers I use. So I use the service revenue initially on the income statement. That is the first statement that we create, and it is for a period of time. So you can see this is for the year ended December 31st, 2024. Then I'm going to list any expenses. It doesn't matter the order you list your expenses. I'm just going to go down what is below my service revenue. I see interest expense and I see utilities expense. So that's listed in my problem for $1,800 and $13,800. These are not the same thing as the payment out of cash. Eventually you should pay all of your expenses in cash, but an expense just means the cost has been incurred. It doesn't tell us if we've paid it yet or not. On the other side, I see the advertising expense that we've incurred for the year is $31,800. So I'm going to put that on here. Advertising expense, $31,800. And I will see below that, buildings is not an expense, it's an asset. So I'm not going to list that. Salaries expense, $63,400. When I have all the expenses listed, I will see if my expense total here, it already sums it up for me, is greater than or less than my revenue. When the revenue is greater, we call it a net income, meaning you have charged your customers more than it cost you to provide this service by $8,300. That's the first statement. Once I use an account balance, I don't post it again on another statement. So I am done with service revenue and I'm done with the expenses. I move on to the second financial statement. It's about our ownership. What did we do with that $8,300 in profit? Did we keep it? Did we retain it? Or did we pay it all out in dividends? So your statement of stockholders' equity is always set up with a beginning, middle, and an end. The middle will say, did you issue any more stock? Did you have a net income or a net loss from the prior period? We had a net income. That would always be an add if it's an income item, subtract if it's a loss item, and then we are going to subtract any dividends that were paid. In this question, we can hone in on this paragraph below, the data, to figure out what our beginning balances were and any issued stock. My beginning is 100,000. I've issued 11,000 more. I don't put anything in this box where the net income and the dividends are on the common stock column because those items are part of the internal ownership retained earnings. Beginning balance of retained earnings, it says, is $13,300 on my problem. I don't put anything in that box for the issued stock because, again, it's like a Venn diagram, and these two sections of ownership do not overlap. It goes in one column or the other, not in both. It says my retained earnings should increase now by $8,300 from the first statement. So I'm going to add that in here, and then I'm going to subtract the dividend amount. I believe it said in the problem that was $3,500 there at the bottom. Your totals just add across. And it will do the math for you, but you can double check it as I add across the bottom. I see this total should be $129,100 when I put the dividend in at the bottom there. Yep. And then I'm going to use these ending balances here, the $111,000 of common stock and the $18,100 of retained earnings on the balance sheet. So anything I haven't used yet up here in the data, I've already used expenses. I don't want to put that. We typically list our assets in order of liquidity. The most liquid asset we have is cash, because liquidity means how quickly can it turn into cash. Then we would usually list any accounts receivables, prepaids, or supplies, but I don't have those in this problem. And then my building. So long-term assets are actually going to be listed below your short-term or current assets. My payables go in the liability section. It says I have an accounts payable. Again, we typically order those in current and long-term. Accounts payable is current or short-term. It's stuff I have to pay within the next 30 to 60 days. Notes payable is like a loan. It's long-term. So then the fun part where you get to see if it balanced. Your common stock amount comes from the prior financial statement, and retained earnings also. So I'm going to flip back over there. Common stock 111, retained earnings 18.1. Type those in. See if we're balanced. If you're not balanced, it might be, I do have a total here of 155,300 on both sides. It might be that you just typed something in wrong. You can check your work. I always check it after I've completed the question. It says it is complete and correct, because if you leave if I just do requirement 1 and then I check it and I haven't done requirement 2, then obviously the empty blanks will be wrong. So all done. If it says it's correct but not complete, you probably just forgot to pick a drop down. Maybe you forgot to select the net income box at the bottom here. The next question is kind of like a Sudoku problem. Maybe you have to figure out how these all connect. So you cannot fill in the income statement first on question 6. You need to refer to the statement of stockholders' equity because it's connected to the first statement. So on the statement of stockholders' equity, we find what the net income total should be, $3,000. So I can type that in here. And basically the formula says revenue minus these 3 expenses should equal $3,000. So I can back into that revenue number. If I add up all 4 of these, so my revenue should be. So 11,000 plus another 11,000. If I put 22 in here, I can check it. Does 22,000 minus 11,000, there would be at another 11, minus 5, we'd be at 6, minus 3, get to 3, yes. So I find first what my net income is on the second statement, plug it in there to the bottom total, and then I add them all up to get back up to the revenue. Statement of stockholders' equity, it wants me to fill in the issued stock, which I can. How much would I add to 12,000 in order to get to 13? So I will put 1 in there because 13,000 minus 12 is 1,000. What would I have subtracted here in the dividend box to make it total 6,000? It looks like 5 and 3 is 8 on mine. So I must have subtracted 2,000 in dividends to get it to balance to 8. Now you can double check it on the side here. 17 plus 1, I would be at 18, plus 3, I would be at 21, minus 2,000. And then on the final statement, your balance sheet, these 2 totals of your common stock and retained earnings need to show up. So common stock was 13 on the prior one, and retained earnings was 6, I believe. I'll double check that. Yeah, 13 here and 6 there. So this side totals up on the right hand side, my liabilities and my equity, to 21,000. If I know this side is 21,000, then that side needs to equal 21,000. So then I can back into the supplies. So if I take supply or the total here and subtract off all the other numbers I know, I can figure out my missing supplies value. So 21,000 minus 14 is 7. 7 minus 4 is 3. 3 minus 1,200. We should be looking at 1,800. And then I will check my work. Answers complete and correct. I don't have any missing values. And then the last one I want to cover is question 7. So these don't have hints. If you've done the brief exercises, I hope that you utilized the hints because it kind of walks you through the problems. But these regular homework questions, most of them may not have hints. Prepare the income statement. Again, we're going to start by Going down through here and picking out our revenues, it looks like this service revenue is listed here on mine as $63,400. So service revenue, $63,400. If it had deferred revenue, I would not put that on here because deferred revenue is a liability. I'm going to look for any expenses. Salaries payable is not an expense. It's what I owe, so it's a liability. Advertising expense should show up on the income statement, so I will list that here. $9,200 on my problem. Buildings is an asset, supplies is an asset, retained earnings is an equity item, utilities expense is the next one I need. It looks like it was $4,800. Notes payable is a liability. Service revenue I already listed on the income statement. Salaries expense, I need that one. $25,500. Salaries expense is different from salaries payable. Salaries expense says here's how much work my employees have already done for me. Of that work they've done, I still have not paid them for $2,100 of that work, but the rest of it's already been paid, assuming that the expense has been recorded properly. The accounts payable is a liability, shows up on the balance sheet, so we don't need it. Dividends on the statement of stockholders' equity. Common stock shows up on the statement of stockholders' equity. Cash, balance sheet. Interest expense, we do need that. It says expense, $1,500. And then at the bottom, if it says accounts receivable here is an asset, retained earnings at the beginning. That goes on the statement of stockholders' equity. At the bottom, we want to make sure that we click the net income box. If you don't, it will say it's incomplete. $22,400 was my net income. I'm going to add a net income and subtract dividends. Beginning balance of common stock is given in the problem. It says common stock that has been issued, including 5,000 that was issued this year, is 25. So what that's telling me is that is actually the ending amount that has been issued. So it's the total already at the end. That includes 5,000 that was issued during the year. So 5,000 is going to go here. The beginning has to say 20 if I want it to end up being 25. Make sure you mark that appropriately in your notes, or you watch that. The 25 they give me is actually what I want to show up as the end. Retained earnings, they tell us the beginning is 22,200. I know my net income was 22,400, so I'm going to add that in. And then it says the dividends. I don't know the answer, but I can figure it out because they do tell me the retained earnings at the end should equal 34,800 right there. So it says at the top, this is the end data for the end of the year. So the end of the year, it should equal my retained earnings of 34,800. The only way I can make that box equal 34,800 is if I plug in a dividend. So the difference between 44,600, just to make sure I don't screw up the math, I want it to be 34,800. If I subtract what's in there now and what it needs to equal, I see that the dividend would be 9,800. So again, on that, you're going to have to figure out what you want the ending to be from the given data and see where you are, subtract the two to figure out how much the dividend should be. So before I plugged in that dividend, it said 44,600, I believe. I wanted it to equal 34,800. So, or it said 44,800 maybe. So I subtracted those. I'm going to back it out. Right now it says 44,600. I want it to equal 34,800. Subtract those two, and it was 9,800. Make sure this balance is across. Should equal 59,800. Yep. And then we fill in our balance sheet from what's remaining. So up here, anything I haven't used yet. Salaries payable. I haven't used that yet. That needs to go over in the liability section. Salaries payable is different from salaries expense. Make sure you click the salaries payable. And then we've already used advertising expense. Building is an asset, so that needs to go on this side. I'm actually going to put it down one more row. Building in the asset section for $68,000. Supplies is an asset. Gonna need that. 3,400. And retained earnings. We're going to use our ending retained earnings from the second statement. We'll fill that in at the end. Notes payable. Utilities expense I've already used. I don't need to use that again. It goes on the income statement. Notes payable of $19,000 goes on here in the liability section. $19,000. Service revenue I've already used. Salaries expense I've already used. Accounts payable needs to be listed in the note in the liability section. And then we're down here with dividends we've already used. Figured that out. Common stock we've already used. Cash goes in the asset section. It says the cash is equal to $4,000 on mine. Interest we've already used. Accounts receivables we do need to list in the asset section. Accounts receivables is the amount you need to receive from customers. Mine says $12,000. Accounts payable is what you need to pay. Accounts receivable you need to receive. So let's fill in these numbers of common stock, ending balance, and retained earnings from our prior statement and see if we balance. So go back to requirement 2, $25,000 there. So that's going to go in for my common stock. Retained earnings I had $34,800. Also should be what they gave you up here, $34,800 and $25,000. Those are the ending balances. The total assets do match to the total liabilities. I'm going to check it, make sure it says it's complete because I may have missed a box. It does. My answer is complete and correct. So that's how you work out questions 5, 6, and 7 on your homework. I will also post a short video about debits and credits. Thank you.